You're listening to the Limitless Wealth Method podcast. Smart ideas, real strategies, and candid conversations for business leaders. Here's your host, Jason Hilliard.
What's up, everyone? This is Jason Hilliard. Welcome back to the Limitless Wealth Method podcast, where I share the ideas and strategies that help entrepreneurs, executives, and investors build wealth and live without limits. Every week, we're covering money, leadership, lifestyle, fitness, mindset, and emerging tech. Everything you need to perform at your highest level. If you're getting value from this, subscribe on your favorite platform, watch on YouTube, and share it with one person who needs to hear it. My goal is simple: help you grow your wealth and your life one episode at a time. Let's get into it. Today, I'm bringing in someone that I work with every single day and is my partner at Forecast Capital Management. His name's John Pistilli. John is the managing director and co-owner of our firm, and he's been in the wealth management game since 1995. He started at Merrill Lynch, spent years at UBS and Morgan Stanley, where he made it into the President's Cup and managed over $150 million in client assets. Before finance, he was a management consultant at Accenture, building systems for companies like Johnson & Johnson and the Government of Canada. He's got a finance and MIS degree from McGill University, and he knows how to blend strategy, systems, and client service at the highest level. This is a conversation you don't want to miss. Let's get into it. All right, John. So I'm going to tee up with a pretty easy question that we'll start out with. So if you had to explain to a complete beginner why gold and silver have been considered money and stores of value for over 5,000 years, give me an idea of what you would say, because I think that's important for people to get some context of where you're coming from.
Well, I would say the exact thing you just said. It's been a store of money for thousands of years. So it's nature's money. It's the way the earth produces gold and silver that makes it amenable to currency, to be used for trade. So if you look at our US dollar, when did the US dollar really, most currencies, most fiat currencies like the US dollar, like anything, the pesos, whatever, we're on a fiat-based system that's backed by nothing. It used to be backed by gold and silver. And in the early 1970s, our government Nixon pulled us out of the relationship of gold to the dollar to gold. So ever since then, what you've noticed is massive inflation, right? And a total explosion of debt. So our politicians hate to have discipline. Gold and silver create discipline. It doesn't allow our government or politicians to borrow trillions at a time, go to wars, do all sorts of nefarious things they do at the Capitol. That's why they hate gold. That's why every time you mention gold in this country, they look at you as if you're a weirdo. I've been involved for, 40 some years. And every time you mention it, they look down at you as like, oh, you're one of those guys. What they don't understand is they're the fools because they're falling into the trap of the government. Put all your net worth in this piece of paper and trust us. Fiat currencies last 29 years. You can say that the US dollar became a fiat currency in the early 70s when Nixon pulled us off the gold standard. And look what's happened in the last 50 years. This is a very different country. Our debt to GDP is one of the highest in the world. Look at all the inflation you're seeing. This is all caused when you remove a link to real money, which is gold and silver.
That makes sense.
And by the way, if you leave the United States, gold and silver is welcomed and loved everywhere. I mean, you go to the Middle East, you go to South America, even Europe. I mean, Italy has the third largest holding of gold in the world. So they understand the value. The U.S. has, in the U.S.'s best interest, what they want to see, what our government wants to see, is us using the dollar and not questioning anything. Because the U.S. dollar is what's called the world reserve currency, which means 90% of trade around the world is done in U.S. dollars. The last thing the U.S. wants to see is the rest of the world saying, screw the dollar, we want gold and silver or something else to store value. And frankly, that's why gold's going parabolic right now. It's because the rest of the world is basically giving the middle finger to the U.S. and saying, you know what, you guys are out of control in your deficits. You're treating your currency like it's a third world Zimbabwe dollar. We want out. And the way you get out, the way you always reset these systems is going through gold. And I think you're starting, you're in the first couple of innings of that happening.
I mean, we're seeing central banks, over the past 3 years, they've bought over 1,000 tons of gold. So why do you think they're doing that now?
Two main reasons. I mean, there's a lot of noise around. There's two main reasons. Number one, in our infinite wisdom, we allowed parties that be to basically seize Russian assets to the tune of $275 billion of Russian US Treasury assets. So the Russians had 275 billion in US Treasuries, and what do? We froze them. We say, sorry, not only did we freeze them, but we started taking all the income off of them because they're in treasuries. So we started using that income and giving it to the Ukraine so they can fight Russia. Now the Europeans want to go even one step further and simply just take that money away and give it to whoever, which is basically themselves. So the reason central banks are buying is, number one, they just realized that owning US Treasuries is no longer safe. It used to be the safest asset in the world, the most liquid asset in the world, and that is, as of now, no longer the case. That is huge. So we kind of shot ourselves in the head with that one. And once that bag, once that's out of the bag, it's not going back in. So I think you're going to see central banks continue to unload their US Treasuries, US dollars, and frankly, just invest them in gold and silver. Gold and silver are beautiful, especially gold. I mean, it's a beautiful asset because nobody knows you have it. You put 100 million in it, it's no counterparty risk. Nobody owns that gold but you. You don't have to worry about, foreign government making some kind of arbitrary decision that totally destroys what you saved, your assets in your treasury in. So I don't blame them. They have to do that. I mean, you really want to be a central banker in China that looks at, Xi and says, sorry, the U.S. just confiscated 250 billion of our U.S. treasuries because they decided we're not playing fair in trade or something like that. So that's the number one big reason. The number two big reason is, you remember all that Doge nonsense when Trump took over? We're going to clean the house. We're going to put everybody in jail. We're going to balance the budgets. We're going to pay down our debts. All these tariffs coming in are going to create so much wealth that we're not even going to have income tax. That's all bullshit. I mean, that lasted what? Couple, 3 months, not even?
Maybe.
And guess what? In October was the largest monthly budget deficit we've ever had.
Right. I
So
remember
not
that.
only are we not showing austerity and cleaning up the mess we created and starting to pay down our debts, we're actually accelerating. So if I'm a foreign entity, or even if I'm an American citizen, I look at it, I go, these guys have absolutely zero intention of ever making the dollar sound as gold like it used to be. So why the hell would you keep your net worth in something that's being totally debased to the tune of $3 trillion a year? I mean, we're a banana republic, guys. I hate to say it, with nukes.
I mean, it's going to be debased even further.
Oh yeah, it's going to accelerate from here. It's not. This is going to accelerate, and the quicker you realize that we live in effectively a Ponzi-like environment when it comes to our issuing a debt and currency, the quicker you realize you better get yourself some hard assets. And that could be gold, that could be silver, I just bought some copper. That can be real estate to some degree, productive real estate. There's many ways where you can protect yourself, even at some point, oil, hard assets, rare elements, whatever. But I think the world is waking up to the fact that we are debauching our currency and have no way of stopping it. The only way is more and more and accelerating. So the world's protecting themselves.
So
you can't print money relentlessly. At some point in time, the markets say no more. And I think, frankly, we're there in the U.S.
I wouldn't disagree. I mean, you have gold that just hit an all-time high, nearing 4,400, and silver's pushing 59 to $60. So is that kind of your sense of what the market is pricing in right now that most people are missing? I mean, because you see the U.S. independent investors are really not getting into gold and silver like India, China, and a number of other these countries. We have no retail investors that are pushing money towards gold, or at least not nearly as much as foreign countries are. So is that what the market's pricing in right now? Because based on what you had just mentioned, that we're kind of in this Ponzi scheme. So gold is reflecting that in price, and so is silver.
Absolutely. I mean, step back and look at what our government's telling you to do. Our government's telling you to buy Bitcoin. In my opinion, that's a total Ponzi scheme, and the intrinsic value is zero. Now, I'll probably piss off a bunch of people when I say that, but stay tuned and watch this in 2 years and tell me if I was wrong or not.
Right.
So the U.S. is pushing the citizens towards Bitcoin, and our own government, our freaking president's taking advantage of it by rug pulling these poor people and making themselves wealthy. So that's what the U.S. government's doing. What are the Chinese doing? They're encouraging their citizens to buy gold. What are the Indians doing? Encouraging their citizens to buy gold and silver, right? So if you look at what just happened, gold basically doubled in the last couple of years. 19% of the world's gold is in the homes of Indian peasants, literally.
19%?
19% of above ground gold.
Wow.
And the Chinese citizens aren't far behind. I think they may be at the same level or maybe even a little higher. So gold just doubled which effectively means the net worth of households in China and in India basically doubled. And what's Bitcoin done? Jack shit for a while, right? Well, in my opinion, that's how the world wealth moves. It moves with, I said this earlier, right? The reset occurs with gold and predominantly gold and silver. And so they're getting richer and we're piling on more debt and we're buying Bitcoin. Tell me who wins that race.
That's an interesting way to put it. I don't think you and I have talked about that
No.
part of it, but that's pretty interesting. I never thought about it that way, where that's literally a transfer of wealth
Yeah.
to countries that weren't wealthy once before. So what do you think is going to take to flip the switch on US retail investors? Do you think it does? I mean, I'm assuming that could be explosive if you get retail US investors on the
Yeah, US retail investors are asleep at the wheel. I mean, why would they buy gold when you can buy Nvidia?
right.
Why would you buy gold and I can buy crypto? Things. So the US investor is totally blinded. What are they doing? They're buying Bitcoin, which is a Ponzi. They're taking on debt to go buy Bitcoin and to live a life that they can't sustain. And they got most of their net worth in the most expensive stock market bubble you'll ever see in your life. I mean, these 4 or 5 trillion market cap stocks, stop and think about what that means. That means you're staring at the most incredible bubble, and this AI bubble is going to surpass anything I saw in 2000, 2008. I've talked to some of my colleagues, and this bubble could be 3 to 4 times bigger than what we saw in '08.
Yeah,
And
I
that is
mean, we've never
shocking.
had this. The
No,
debt
because
load is insane.
you got 2 bubbles that are bursting potentially or starting to burst real soon. One's real estate and the other one's our freaking stock market, predominantly the tech sector. So 2000 was a collapse of a very small portion of the tech sector, and it created a recession and some really difficult times. '08 was a collapse, really, and it was more of a financial collapse, but it impacted the real estate market. So today, what do we have? We have both. We have a real estate market that's imploding, and we have the biggest bubble especially in tech that mankind's ever seen. This is going to end in a shit show, man.
So, if somebody's listening to this and they're thinking, okay, what percentage then of someone's net worth should be in physical gold and silver outside the financial system? Because as you had mentioned, the financial system is kind of a Ponzi scheme, right? So I know your suggestion for your personal side, what it might be, but for somebody that's never been involved in gold and silver, what do you think that they should put into net worth?
So that's a hard question, because most people live paycheck to paycheck. So if you are running tight on assets, because once you buy physical gold and silver, you got to forget about that money. I mean, typically you don't sell it. You give it to your kids or. So when you buy gold and silver physically, you got a couple of issues. One is it's capital that's no longer available to be used to pay bills or do whatever. 2, it's kind of a pain in the butt because you got to store it. You don't want somebody to show up at your door with a gun. And so you got to store the stuff. And then if and when you want to sell it because you want liquidity, you need that money to pay a bill, it's a pain in the butt. So I'd say if you have limited means, stick with GLD, SLV, or some of the ETFs, and that way you can trade them. So for example, in our book right now, the money we're running, I've got about 16%, 17% in silver, believe it or not, which is freaking nuts. But I've never done that before. I used to be one of the larger precious metal dealers in Morgan. And back then I would only have, let's say I had 20% in GLD gold. I'd have maybe 8 to 10 in silver or less because of the volatility. I've actually flipped them this year. So I've got 17% in silver, 16% in gold, and then about close to 15% in the mining companies that mine gold and silver. The beauty of having, so the allocation's huge, right? We're talking close to 50% plus or minus. The beauty of that is I can trade it, right? So when gold gets overextended, I can take profits, when and then once it corrects, I can go in hard again, which I've been doing over and over again here. You've noticed, right? In the last, call it year.
Absolutely.
The problem with physical is once you buy it, you don't trade it. So if gold shoots up and you happen to have bought it at the top, now you're kind of screwed for a few years, right? Because you're not going to go sell it, probably. So that's the difference between gold and silver. I mean, physical and the markets. Now, do I trust the ETFs? Yeah, kind of, sort of. But I'm watching silver. Silver could become a problem in terms of the availability. So you got to be real careful. They may do a force majeure on you like they did with nickel years back or whatever. So the beauty of physical, though, is once you buy it, you're not going to trade it, which most people can't trade. And guess what? If there's a true reset in the world, our dollar gets totally destroyed. We have, God forbid, problems with the grid, God forbid, some kind of Mad Max scenario. Well, then you can use your gold and silver to live. I mean, in that scenario, nobody's going to want US dollars. right? So I'll give you an example. In World War II, I think it was, the British soldiers had a survival package, and in there were British sovereigns. Each one is 0.1867 ounces of silver, gold, I mean. And that's what they used to bribe themselves out of the country. You land in the middle of Iran and you're a pilot, you ain't going to get out of there with US dollars. You showed them a 1 ounce gold coin. Okay, let's talk.
Yeah.
So that's how you would use physical. So physical is really, you don't want to put too much in it because what I said, the illiquidity nature, and by the way, taxation too, that's taxed as collectibles, which is painful. But if we do get into what I call a Mad Max scenario, your supply chains are screwed, you're at war with who knows who, or, the grid goes down, whatever, it wouldn't be a bad idea to have a little bit. I'd say no more than 5% of your net worth, your liquid net worth.
You store it.
It's probably. You don't want to keep it on you or anywhere near you. You could use, custodians, so you can have it in Delaware or New York or whatever. If you're buying, if you're buying large components of it, you can physically store it with these depositories anywhere in the world. So if you're a real big boy and you want to buy $1 million worth of gold, you can store in Switzerland and Singapore, Hong Kong, anywhere you want. Or you can take it down to your local bank, a safety deposit box, and just put it there.
Right. So you had mentioned silver, and it seems like with silver's price, we're kind of on the verge of a structural, deficit of silver that dwarfs anything we've seen before. Is that true? What are you seeing in the silver market that's really pushing this to an elevated level? Or shouldn't even say an elevated level, but a level we haven't seen in a long time.
There's a supply issue.
That's what I thought.
So the supply demand has been out of whack for 5 years to the tune of about 100 million ounces a year. And that 100 million ounces a year has been made up through investors. So people had bought silver way back when, selling it because it's at $57, all-time high, I'm going to sell my silver. You can only do that for a certain period of time, right? So now what you have is you have two components. You have the investors coming in because prices are going up. And what do most investors love to do? Buy high. Mm-hmm. So the higher the silver price goes, the more interested a lot of these individual investors are. So they'll push it up. And then you have the demand side from industrials. So for example, the Chinese, I think the number is they produce 1 solar panel per every 5 or 6 seconds, I believe is the stat I saw. And every one of those solar panels has something like 0.6% of an ounce of silver. Well, once that silver goes in that panel, it's gone. You're not gonna disassemble a solar panel for $30 worth of silver. And if silver doubles, and I'm only using 0.6, okay, now it costs me $60 per panel for silver, not $30. Am I going to lose sleep on that? No, because the panel goes for, I don't know, $800 or $1,000 or whatever it is. So the demand is coming from both. And this is where it gets crazy, because once investors show up to buy silver, that really messes it up. Because now on the industrial side, they're hurt. I'm already seeing where some industrial buyers are coming in and buying 6 to 9 months worth of silver. Because they're afraid they won't be able to get it. So it's going to get interesting. I mean, you're not going to fix the supply issue in less than a decade, because silver is what's called a byproduct metal. So by that, I mean, there are very, very few mines in the world that only produce silver or primarily produce silver. Most mines in the world are a copper mine, a gold mine, a nickel mine, a cobalt mine, whatever it is. And one of the byproducts is silver. So if I'm a copper mine, and I produce, I don't know, 100,000 ounces of silver every year, I really don't give a shit if it goes from $60 an ounce to $200 an ounce. It's not going to change my mine plan. My mine plan is to mine copper. And whatever silver I produce, just sell it. Get rid of it. So that's why it gets interesting. It's one of the few metals that doesn't have a very good supply. What do you call it? Inelasticity of the actual product of the commodity.
Right. Yes.
I mean, you could take silver to 200 tomorrow and you're not going to see that much freaking additional production next year.
Well, you always mentioned how long it takes to get one of these online. I mean, how long does it take to get a mine to actually produce?
12 to 15 years.
There you go. And you can't just do it overnight.
Some jurisdictions are 20 years. Who's going to invest that time and effort to do that? Very few, especially not $20, $30 silver. Now, $100 silver, yeah, you get a lot of interest, but that's going to end up taking you a decade. That's what I'm saying. I don't see the imbalance fixing itself at the earliest by 2035. Believe it or not.
Yeah, that's crazy.
That's why we have 17% of the stuff on the books. It's a horrific asset to own. Its volatility is off the chart. I mean, look at today. It's down 3%, 2.7%, and gold's up. So be careful with it, but that's what's going on. So silver has a chance of making people very wealthy.
Mm-hmm.
but most people aren't going to be able to do it because, like, I keep in my drawer on my desk a day where silver was down 10% in one day. How many people are going to live through that, right? It could be down 25% in 3 days, 4 days. So that keeps a lot of you just got to be aware of it.
Yeah, it's a wild asset. It's the wildest asset out there. It really is.
Crypto's number one, but silver's not far behind.
Yeah. I mean, I remember having this conversation with you about royalty and streaming companies. And I know that, over the years, they've pretty much crushed the miners. Are they still the best way for an average investor to get leverage, or is that turning?
No, you'll notice in our book, I used to have just a little bit in royalties and I pulled it out. Number one, royalty companies are expensive. Number two, when you're in a real bull market, you want the miners, in my opinion, because the miners were incredibly cheap when we started buying them. And the royalty companies weren't. And if you've noticed, the royalty companies have severely underperformed the miners, the juniors as well as the majors. So in a true bull market, you hold your breath and you buy the juniors. I mean, I did this in between, I think it was 2003 to 2005. The junior miners went up something like 5 to 10x, right? So if you had the courage, the wherewithal, and the analysis behind you to get some of these names, you made a killing. I mean, I think I told you about my Western silver that I bought way back when, around that time. The thing got bought out 2 or 3 different times, and it was more than a 10 bagger. But holding on to it during that period was difficult because of the volatility and all. But that's what junior miners, that's what even the majors can do in a true bull run. The royalty companies are much higher quality. They're financial instruments. You take no management risk. You don't take any mine risk. You don't take any geopolitical risk. You basically finance the mine and you collect a royalty for X number of years or decades. It's a beautiful business model, especially in the mining industry, which is a horrific sector. So many things can go wrong and do go wrong. So the best way has been, and the safest way has been, was to buy the royalty companies. When you're in a potential reset of the financial system, and these things look like they want to go totally parabolic, even though they've had massive moves already, then you'll make more money, in my opinion, in the juniors and in the majors than in the royalty companies. Now, there's a good chance that, fast forward, if I'm right and this thing goes totally nuts, that in 3, 6, 9 months, I'll start moving some of the miners into royalty companies.
Well, we've had a lot of consolidation in the industry, right? A lot of these larger firms buying these small junior. What was the recent one that just happened where you're like, the company was shit?
Yeah. So what happens is these juniors are always on the brink of going under because they're always cash starved. So their whole goal is to true up some resources and hope and pray that one of the majors spends way too much money buying them. So by and large, this sector is filled with crooks. And frankly, you can say that about most sectors anymore in the stock market, since nobody manages anything. The SEC doesn't exist anymore. And for firms like
for us,
the little guys, we get audited and everything. But if you're BlackRock, you're Vanguard, who cares?
Yeah.
Do what you want.
Exactly.
Who cares if you're manipulating markets? So nice shovel now, by the way.
So, you talked a little bit about Bitcoin, and, I know you're a huge Bitcoin maxi, right?
Oh, yeah,
Yeah. And you get a lot of Bitcoin investors saying gold is a boomer rock and it has no yield. I mean, give me your sense of Bitcoin, because there's a lot of people out there that I think see the price of Bitcoin and see the previous years of Bitcoin, and they look at it and say, why wouldn't I just put my money in Bitcoin and let it ride? Because it went from 60 grand, down to 20 grand, and then went up to 100 grand, and so on and so forth. And it's going to be $1 million by the time you know it, because there's a limited amount of Bitcoin and so on and so forth. So,
which isn't true, by the way, but yeah, keep going.
Yeah. So, I mean, you have a lot of people out there that are really, really big on using the majority of their savings and placing it in Bitcoin. And I personally think that's a bad idea, but I want your sense of why you think Bitcoin is really not an asset to hold a lot of your net worth in.
Any of it.
Yeah.
So if you look at Bitcoin, their whole marketing is effectively, we're going to mimic gold.
Yeah.
Limited supply, blah, blah, store of value, inflation hedge, all this nonsense that they try to attribute. I mean, the narrative around Bitcoin changes literally every other month, depending on what's going on, right? Gold is gold. It's money, period. So why would you buy crypto that is trying to mimic gold when you can just go buy gold and buy the real deal? In crypto, you don't think the government knows you own it? They think it's safe and private? No, throwing a piece of gold and, burying it in your backyard is private. these crypto folks don't understand that they're being scammed. They think some guy named whatever his name is, Satori or whatever, created this, and he's a mysterious guy in Japan or some nonsense. It's the freaking CIA. They use it for money laundering. And there's going to be a rug pull someday when all these little kids that are putting all their net worth in it because they think it's going to go to $1 million and then $5 million. It could go to 20 billion. There's nothing there. It could be worth $1 or 20 billion. Doesn't matter. You decide because it's nothing. That's why it's a beautiful asset. There's nothing there. So you can create all sorts of imaginary reasons why it's going to 2 billion or 2 million or 500,000 or whatever it is. It's like, what do you own, guys? You own a digital something stored somewhere. You don't think the government knows it's there? Freaking yeah, they do. So if you're going to buy crypto, then you're a fool. Buy gold. Buy the real thing. At least you can leave the country with it. By the way, the grid goes down. Guess what your crypto's worth?
It's fair.
So
if I'm going to go back to something that I think I don't know if it could ever really happen again. I know Luke Grahman talked about this, and I think that our buddy that was, gosh, what's the gold guy from Montana's name, John, that always gets interviewed?
Montana?
Darn. I think he's from Montana.
Rickards?
Anyway, what's that?
Rickards?
Rickards. Yes.
Okay.
James Rickards. Yeah. So
he's on the East Coast.
Kind of,
yeah.
Yeah. Oh, he's on the East Coast. Okay. So when I hear them, there is always some conversation with them about what if the dollar gets backed by gold again? What do you think? I mean, you have this idea that Luke Grahman throws out that says, if you place gold, as a back, just like they did back in the 70s, if the dollar was backed by gold, the price of gold would go parabolic. The U.S. owns a bunch of gold, possibly could pay down a ton of debt with the increase in price of that gold. Do you think that's even a remote chance that they get another Bretton Woods where they would revalue the price of gold and have the US dollar backed by gold? Is that in any way, shape, or form a possibility?
Yes.
Okay. And is it because of what I had mentioned? Because if the US holds as much gold that it says it does, nobody really knows. At least I don't think they do. Does that give you a sense of maybe if that price of gold goes up, the amount that they hold could eventually pay off a large portion of the debt load the U.S. now holds?
So if we step back and let's assume that we do have the gold in Fort Knox, right? It's a big assumption because frankly, I think it's been stolen, but I don't know for a fact. I just know everything else is so corrupt. Why wouldn't they go after the gold? They always go after the gold. It's why we invade a lot of countries and steal their oil and gold. So in an event where things get really out of hand and all of a sudden we start seeing, currencies are currencies, the value of dollar is based on its relative relationship with the euro, the yen, the Canadian dollar, and all that. They're just trading sardines, right? I mean, at one point, the dollar be stronger versus the yen, and then it'll flip and whatever. So those things are not what you look at. When you look at the dollar, you look at what the hell could the dollar buy, not what is it doing relative to these other stupid countries that had the exact same issues, if not worse than we do. Right. So when you look at the dollar, what's inflation? Inflation is the destruction of your purchasing power of the dollar. You're seeing inflation everywhere. What does that mean? That means that we are destroying the value of your currency that you're working for. You're still making your 50 grand a year, but everything went up 8% last year. That's called currency debasement. If it gets ugly enough where you start going into something similar to what you saw in the Weimar Republic, God forbid, or some kind of a major inflation scare, currency collapse relative to the other currencies, yeah, they could do that. And my guess is that's their last resort. So, for example, if you take the amount of gold we supposedly have, and we keep it on the books at $35 an ounce for whatever stupid reason, if you reevaluate that $35 an ounce to, believe it or not, 10,000. 10,000 used to be, and it's probably now more than that, at $10,000 an ounce, US dollars per ounce, given the amount of supposed gold we own, that would balance our external deficits, not internal, but external. Now that was many years ago when I I looked at all those numbers. Today it's probably, 15. So the US technically could kind of reset the system and create confidence again in the dollar by saying, hey, things are getting out of hand. We're going back to a gold backed type of currency. And gold today is now worth 14,000 an ounce, not 4. They've done it before. So that could happen, and I wouldn't be surprised if things get totally out of hand. Now, we're talking probably many years down the road, if ever it even happens. So that's how you can use gold. And the way they use it, it would be only for international trade. You'll never be able to go to King Soopers and say, hey, here's my, $20, give me gold. Or here's an ounce of gold, for my groceries. It's inconvenient. It doesn't really work. And we're past that. But in order to regain confidence in your system and your currency, if you totally screw up like what we're doing, you may have to have a revaluation back to gold. So this Luke fellow you mentioned, yeah, I wouldn't be surprised. I'll tell you that. I don't expect it anytime soon, but who knows, man? The way things move these days.
Yeah, I think it's a really interesting idea that he kind of put out there. And he did give that $10,000
Oh, did he?
per ounce number. Yeah, he did. And he said it would eliminate what you had said, the external, the deficits. I mean, governments have confiscated gold before. I think it was sometime or in the early 1930s. And I mean, if they do this, let's say, there's another revaluation of the dollar, it's then backed by gold. Do you see any way that the government would confiscate gold? Do you see anyone, any problem with that?
In the 1930s when they did it, so here's how great your government is. They went around and saying, because we're in a depression, blah, 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 we need to confiscate your gold. They had a whole bunch of reasons. And they confiscated, very few people showed up and gave it to them, number one. Most people said, F you, right? But they bought it from you at $28 an ounce. And once they were done confiscating as much as they could, then they revalued it at $35. And that $35, that's what, so that's about a 30% revaluation. Guess what? That kickstarted the economy because all of a sudden you injected 30% more reserves into the system.
Yeah,
so
that
today,
makes sense.
we don't need to do that anymore because all they do is print trillions of will. And number two, citizens don't own gold. In the 1930s, gold was backed. The dollar was backed by gold. You could go to the bank and say, here's $20, give me my gold. Today, there's absolutely no linkage to it. People don't own it. Why would they confiscate it? They gain nothing out of it other than bad press. And people know that they screwed you over in 19 whatever. Nobody's going to give them gold. It's like, go pound sand. That's why I said earlier, there's a chance that they do revaluate it if things get ugly like in the 1930s, because they did it before. Right? 27 to 35. So imagine you handed over your gold at 27, 3 weeks later it's trading at 35 and the government got to keep all your profits, even though you sat with it for 20 years. I mean, that's a system we're in.
That's brutal.
That's why you always want to do literally almost the opposite of what they tell you to do. They tell you want Bitcoin, short it. If they tell you that gold's only for weirdos, buy it.
Yeah, I mean, we've seen a lot of ways that the herd goes one way and we think about why is the herd going that way, because it's most likely wrong. And it makes a lot of sense. I mean, the herd really does kind of move in one direction and you got to be willing to kind of look at the other side of things and why they're moving that way. So I mean, it makes a lot of sense.
I feel sorry for folks in NVIDIA. I mean, NVIDIA is a Cisco of 2000. And I think I've shared that story with you. In 2000, I was in Cisco in a big way. And I figured the bubble was popping. And so what do? I sold it. And it ended up going up another, 15, 20% from where I sold it in about a 4 or 5 week period. I had a couple of clients even fire me because of it. And then the damn thing went down for 20 straight years and lost 90% of its value. People understand bubbles and manias end in a 90+%, typically 98% washout. 98% is gone. That's how bubbles cleanse themselves. And if you don't think we're in an AI bubble, then you're a fool. I mean, then you truly don't understand markets.
This goes to my next question. I mean, you and I both believe along the same lines where there is going to become a day of reckoning where all the debt that's piling up, all these bubbles that are occurring, all these crazy dynamics that are going on in the world economy. What is major malinvestment? What is the straw that breaks the camel's back? Is there one? Is there something you're looking at?
Yeah, it's going to be, no one's going to see it coming. It's going to be something nobody's thinking of. It always is.
I mean, obviously,
in 08, it was Bear Stearns went under, and guess what the market did after they went on? Went to a new all-time high, right? Yep. And then Lehman hit, then AIG hit, and then it was like, okay, it's over, right? It takes a lot for a mania to get to reverse, but when it does, the collapse is brutal. I mean, you take stairs up and the escalator down kind of thing, right? The elevator down. Mm-hmm. So if we go back, I mean, here's what's really interesting with gold right now. Like in the 2000 to 2000 era, 2000 to 2010, I was heavily involved in precious metals. And they really took off when the stock market went into a bear market. This time, what's really crazy is that gold and silver have outperformed literally almost everything this year. Not everything, but 99% of the assets out there. And there's no recession. There's no bear market, technically. I mean, we may be in a recession, but there's no bear market. So gold and silver have done this, and the miners that are up, 120, 150% this year, they've done it in what you could technically call a very good setup, right? Stocks at all-time highs, the economy is not contracting, people are still spending, at least people with money, the upper echelon folks. So can you imagine silver and gold have moved up simply because they're realizing that we're coming to the end of this fiat system, this current system, monetary system. Can you imagine if we go in a bear market and Nvidia drops 70%? Where do you think that money's going to go?
Yeah.
So you need a bear market to have a true bull market in gold, even though we've already had a massive bull market, one of the biggest ones I've seen, without the recession, without the stock bubbles popping. So that's why I sit here and say, how high can it go?
You've never seen a situation where gold and silver have moved like this in an environment, we'll call it a bull market environment. You've never seen it kind of
even when it really performed, so from 2000 to 2010, the S&P was flat that whole decade. So if you bought stocks in 2000, by 2010, you were still the same level. Gold throughout that 10-year period of basically two bubbles crashing, right? You had the dot-com bubble and you had the real estate bubble. So the dot-com in 2000, real estate in 08, that both imploded, both took down the stock market. Gold during that decade went up something like 18% a year with no down years. Right. So imagine if we get a bear market here. Imagine for the next year and a half, the S&P is down 40, 50%, which it should be. It's stupidly valued. Where's gold going to go? I don't know, man. It kind of scares me because the higher it goes, the higher the potential for a total reset of this mess.
I would agree 100%. You could fast forward 5 years and you could be at gold 10,000 in my mind. And you could be over 100 plus in silver. What's that?
It may happen a lot faster than that.
Yeah, it might. Listen, my biggest concern.
Listen to Rickard's last interview. He's talking a doubling in like really short period of time.
So this was the latest interview with Rickards, right? Yeah.
No, he doesn't know everything like everybody else, and he's been a gold bug forever, but he's kind of been more right than wrong over the years. I've been following him for probably 30.
Yeah. I wouldn't disagree with it. Nobody knows, but I think that the big thing that we need to look out for and everybody needs to look out for is really keeping your pulse on the bond market, because that's a house of cards. You have Japan, you have Germany, you have China that were the biggest buyers of US Treasury debt. Now you have Japan that's getting rates just as high as the US. So why would they take the currency risk? You have Europe that's, spending all their money on defense. And then you have China that's saying, screw you. We're not buying any more treasuries. Who in the world is going to buy those treasuries when 57% of the debt is already absorbed by the US investors, which is the highest ever? So you not only have to compensate for the amount that they bought, but you also have to compensate for the amount to fund the debt that's currently being produced through the US internally and externally in the US government. I think that is just and they're going to have to go to yield curve control at some point, because I don't know when that's going to be, but there's no way you can stop it.
Well, and they're going to resort to QE, which has already started again.
Absolutely.
Quantitative easing is basically the Federal Reserve printing money out of thin air and buying US Treasuries with it. And so that's how they're going to get around the fact that there's, substantially less demand from our trading partners and investors. They'll print it. And why do you think gold's moving up the way it is? It's already anticipated. It knows that's about to happen. Right. So gold that's another reason why it's going higher, because they know that effectively we're running our finances like a Ponzi firm, So gold smells that and there's, I wouldn't be surprised. There's a lot of these billionaires who are out there building their bunkers, doomsday bunkers. They're all doing it. Gates, Zuckerberg, the Amazon guy, what's his name?
Yeah.
Forget his name. Yeah. He's building 5 of them. So if you're worth 50 billion, you know what's going on. You know the game. And there's a lot of things they're looking at that you and I don't I kind of watch it and I see what they're doing and why. You don't tell me those guys aren't buying $500 million of gold and saying, put it in my bunker. What are you going to do? You're going to put dollars in there?
Yeah.
It's like a piece of paper.
Yep.
right? You're not going to put copper in there. You're not going to probably put silver. It takes too much place. You can buy a shitload of gold and say, put it in there.
Yeah.
Because that's that's how I'm going to preserve my wealth if I'm right and we do hit some kind of, God forbid, massive, some kind of, event that, takes civilization and messes with it.
Right. So, I mean,
We're
one
really
last
going
thing.
deep now, buddy. Now we're talking Armageddon and
Yeah,
World
yeah.
War
If we're
II, all
talking
sorts of
Armageddon, all bets
Armageddon,
are off.
dude.
Yeah, yeah. All bets are off at that point.
Yeah.
So if somebody wanted to protect themselves when they didn't really know about a lot of this, how gold and silver and the economy kind of work together, a lot of the things they don't understand, maybe junior miners, they don't understand gold, they don't understand silver, but they do understand the ability of those to be placed in a portfolio to combat a lot of the equity exposure, bond exposure that they have. So in your mind, what are the easiest ways for them to combat that? What are the easiest ETFs or investments they can make to place in their portfolio for the specific reason of how dangerous it is going forward for the U.S. economy?
Yeah, that's a hard question because, I've been following this stuff for 40 years and I struggle with it, right? Because the problem with these things are they're very volatile. They're very hard to just buy and hold,
Yeah.
and the system doesn't want you to win. You got a lot of things against you when you're going into the sector to protect your net worth. So what I would say is, number one, gold has got to be your top asset. It's the least volatile and the highest quality of all of that stuff, right? So gold should be kind of the cornerstone, and you allocate X% in GLD or PHYS, and that's kind of your stability component, even though it's volatile. Silver and the miners. If you really want to do this in a way where you're not like we're doing this to get capital gains, right? I'm trading this to make money, right? I want to be the S&P, and we've done it this year. We doubled it, even though we've had 40% in cash, right? It's all metals.
Yep.
So to me, I use it to create more pieces of paper that you can then use for whatever you need it. It gives you optionality. If you have somebody with 100,000 says, I want to protect myself, what do? Well, number one, you probably want a chunk of it in treasury bills that are earning close to 4%. I know that goes against everything I just finished saying, but there's still a use for it. It provides you, the ability to have liquidity when nobody else has it. That's why I got 40% in treasuries. If and when this bubble bursts, and I suspect it's close, what's going to become very, very difficult to obtain is cash, because people are going to get margin called, liquidated. It's going to be a shit. There's over $1 trillion of margin debt. This is
You look at
nuts.
2020.
Oh yeah, it's bigger than ever. So having optionality by having liquidity is important. So 25% in cash is good. Like we've got 40. Then maybe you put 15% in GLD, PHYS. Maybe you put half that much in silver, and you put a similar amount in miners, predominantly GDX, GDXJ, SIL, and SILJ. One's the gold large cap and small cap. The other one's silver large cap, small cap. So if you look at it, if we do it this way, you got 15 in gold plus another 15 between silver and miners, 30%. That's a huge allocation to the sector. Our current allocation is over 50, but that's because I've been doing this for 40 years, right? So I have a sixth sense of when things are getting a little scary, and I back off. And then and then when an opportunity like this shows up, which I've almost never seen, I go big, right? So that's hence the 17% in silver. It's crazy, but it's working massively.
Well,
So that's what I would say. I would say, and then the rest of it, be careful, man. So let's say you got 30% in gold, silver, miners. You got, call it 30% in treasury bills. That's 60. The other 40%, that's in the bubble. What are you buying?
yeah, it's
Good
tough.
luck. Good luck.
It's really
So,
tough.
but on the other side, you really want to put 70% in gold, silver, and miners and 30% in treasuries. I did that, by the way, between 2000 and 2010. It worked incredibly well. I was one of the top performers out there until the 2010 bear market and gold hit, and then I was the biggest idiot out there, right? So because I overstayed my welcome in that sector. Now I'll go long or short, I don't care. So to answer the question, the other, call it 40%, I don't know what I would do with it. Maybe you buy some oil, maybe you buy some copper. Oil is horrifically out of favor, so it's probably a decent entry, unless we go into a real serious recession, which could happen. So I don't know. Copper has got a similar supply demand issue as silver, so you may want to play that. I mean, like I said, I just bought some more right this morning. Let's see, what do I have on here? US bonds. You may want to buy 20, 30, 10-year bonds just as a trade. If the markets does get hammered, you may make some money off that, but why would you buy bonds of a bankrupt country? You can start shorting.
Which is a characteristic most people don't have. It's tough to go against everybody. You got to be somewhat of a pessimist, right? Or someone, you have to be very confident in what you do in order to short it. And you and I have, you've been shorting stuff for, in certain occasions. I have too. But I got to say, I don't think people understand how difficult this environment is and how difficult it's going to get. Because when you are on the precipice of a bubble in the stock market, yeah, everybody is making money on the stock side of things. That you and I both know how fast that can reverse. And being able to get out of the way, which we have done in every one of these, might I add, every one of these that we have been partners in, we've gotten out of the way of, which is extraordinarily difficult. And part of it is because you have an innate sense to your gut is very good at kind of speculating on when these things occur. But in the grand scheme of things, you are one of the best precious metals traders. So everybody can't be like you, right? But giving people a sense of how they can combat what's going to come forth in the coming years. We don't know when it's going to happen, but you better get the fuck out of the way before this happens, because it's going to be an interesting time.
Listen, you got real estate and an equity bubble that are both starting to implode. And when these things go, you're going to realize we're not a strong nation. Our balance sheet is very weak. We have way too much debt, way too much leverage in the system. We're not the same country that we were in the 1980s when we had the crash. We're not the same country even in 2000 when we had the dot-com and the real estate crash. We've really, really turned into and running our finances like a third world country. And the only reason we haven't seen it you see it in inflation. You see it every day. You just don't know why you're seeing it. But the only reason we've been able to get away with it so far is because we have a military. And now we're starting to use that military, which is what banana republics do towards the end. As they're starting to collapse, what do? They start bullying everybody around. I mean, why are we in Venezuela? It's not because we give a shit about the terror, the drug guys. We couldn't give a rat's ass. Only 4% of our drugs come from Venezuela. 80-some come from Mexico. Why are we bombing the shit out of Mexico? It's because Venezuela has the largest oil reserves in the world.
Yep.
Why did Trump, the minute he got elected, start saying, make Canada the 51st state? Because they got a lot of resources. Same with Greenland. So we've given up trying to get Russia's resources, because Russia has the largest resources in the world. Russia has $72 trillion worth of resources. Actually, it's more than that, because they just found that $20 trillion worth of oil, believe it or not.
Wow.
So they're the wealthiest country by a country mile, more than 2.5 times our mineral net wealth, and we're number 2.
Wow.
So why do you think Europe is trying to attack Russia for no goddamn reason over and over and over again? Ukraine's a banana republic. They're a bunch of fucking goddamn corrupt idiots, and we're sending hundreds of billions of these assholes so that it gets spread out, right? We send you 100 billion, you send our Congress back 10 billion of that. Zelensky, you keep 2 billion. Your buddies over there, they get 15 billion, blah, 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 blah. That's what's going on. And so I forgot where I was going with this.
Well, you were talking about resources in Russia and Canada and why the U.S. is going,
Oh, I was saying, yeah. So as you start to collapse as an empire, what do? You resort to exactly what we're doing. You use your military, which you've spent so much money on, to go monetize or get back that wealth that we spent on that shit. So we're going to go after Venezuela. Then there's Colombia there. Argentina is willingly going to give us their, rare earths, right? So we're now moving in the axis north-south. So the U.S. has realized we're becoming more and more, we're weakening as an empire. So we're going to give up Europe. We're going to give up Asia, right? But we're going to keep Canada, U.S., and all of South America, because that's our hemisphere of influence. And there's plenty of minerals there to keep us going. So I think that's what's going on with the military. The whole Ukraine thing makes no sense. It's all about graft, corruption. The Russians won that war a long time ago. It's not even close. And yet the media will tell you, oh, they're in the cusp. Bullshit. You're going to fight Russia? Good luck. They know how to fucking fight. And my concern is that we're going to go up against them. We're going to go up against them at some point. I'm worried about. And we're going to realize that the emperor has no clothes. And that's when the dollar really gets hammered.
Yeah.
God forbid we go to World War III and we don't live up to what everybody thinks we were capable of. Because then you better have a lot of gold. And you better have it physically too.
Yeah, that's the truth. Well, John, I appreciate it, man. We always have good conversations. I appreciate you taking the time
You're welcome, man.
to talk to us. And I know you got a lot going on. So we'll do another one sometime soon, but I appreciate the time. All right, man. We'll see you soon.